on 3AW, the real estate show, thanks to Raine Horne. With 141 years in Australian real estate, trust Raine Horne to guide your real estate journey.
And we're talking real estate with Raine Horne's Randolph Clements, Managing Director, and James Pastras, the Director of Raine Horne Properties and Investments, back in the studios of 3AW. First up, Randolph, good morning to you.
Morning, Darren. I still haven't got that de Botley wine. What's going on?
Well, you know, there's always some available at some stage around the corridors of 3AW.
All right.
Hey, real estate, the lines are open, of course, 133 693. Today we're talking about, the proper way to go about selling an investment property. And what is the first port of call? I guess finding a good agent. Is that the deal?
Well, I think the first port of call, Darren, is a lot of people think that investment properties and investors are strictly true blue investors. To me, any person that buys a property, whether residential or commercial, is really an investor from the very word go. He's got to make sure the property is at the right price, the right location. But apart from that, I'll hand over to James out here, who basically sells investment properties.
Hi, Darren. How are you?
Yeah, good, James. It's. I tell you what, it's a big thing to consider, isn't it?
It's not really. It's quite simple, but people don't know how to do it. But if they want to retire comfortably, they need to look at investing in property.
And what do you think is step one? If you've got the cash, if you've got a deposit, where do you go and what do you do?
You make an appointment with us, and we go through it with you. We have, of course, financial brokers, financial advisors, accountants that can help you straight through the process.
Is there a sort of a model that you use, or is every investment property different?
Every investor is different. They have different needs, they have different wants. But the model we have is initially we have an appointment with them. We sit down, we talk to them, we find what they're after. And then they go to step two. We go through finance and how the property is going to work for them. If they have enough equity in their home, they can use the equity. Instead of putting any of the cash, they put zero of the money because they use the equity of the home to get into a property. And of course, financing is very, very important. It's the way you finance it. You know, some people prefer to do interest only because, for instance, a $600,000 property, by using your equity, in other words, and using zero of your money, that property, after the tax deductions, after the rental, it is probably costs you very little per week, probably $100 to $150 per week. It depends how you structure it, of course. Yeah, very important.
Very
Structure
important.
is very, very important. Yeah.
Yeah, for sure. Now, what about residential or commercial property? A huge difference. Benefits to both. Do you think?
I personally prefer residential property, and we specialize in residential property. We're specializing in brand new properties, like brand new homes, brand new townhouses, in areas that they give you very good capital growth. Very important. Capital growth, location, easy maintenance, and rental demand. That's where you have to be. Yeah.
The thing I'll say, James, about residential commercial is whilst in commercial, of course, the benefits are that the tenant pays most of the outgoings apart from land tax. He pays all the outgoings.
Yeah.
They maintain their property because they're running their business out of there as well. So it's of paramount importance to them that they'll look after your investment. The other thing that I would add to this when buying investments, and I would pass this on to especially the young investors, is not just look at the initial deposit they're putting. It's interesting that the Labor government has said you can buy a property on a 5% deposit. Sure, you've got to make sure that you can afford to look after the 95%, the repayments, but also I would say that they should build a fighting fund before they buy the property. That fighting fund takes care, at least a 6-month fighting fund, in case you lose a tenant.
Sure.
Right? You might have to do some maintenance to the property. So if you cut your mathematics so fine that if something goes wrong, you haven't got that fighting fund.
That's what you need. You need to have a small backup, somewhere to go to.
Apart from your stamp duty and your legal costs in settling on the property when you first buy the property, that fighting fund for at least 6 months in case something goes wrong.
They say property in Australia just about doubles every 10 years. Do you agree with that?
Yeah,
It's
true.
If you buy well, and the other thing I'll say about investment properties is you've got to decide as an investor, are you buying because you want to have emotional ties to the property, or are you buying because, let's say, it's an $800,000 property and you know it's going for 600? Well, that's a bargain. Now, if you start getting emotionally involved and say, I don't like this, I don't like that about the property, then you're picking and choosing then. You've got to decide, I'm buying an investment, I can settle on this, and I can flip it in 1 or 2 or 3 or 4 years with a little bit more capital gain. That's where I'm making a bit of money.
Good advice. If you have any questions at all for James Pastras, the Director of Raine Horne Properties and Investments, or Randolph Clements, Managing Director of Raine Horne, give us a call. Here on 3AW, we're talking real estate with Raine Horne at 18 to 12. Randolph Clements, Managing Director of Raine Horne, is in the studios of 3AW, along with James Pastras, the Director of Raine Horne Properties and Investments. I'm here at the very special kids headquarters for their big charity fundraiser. There are some property investing myths, I believe. Property always goes up. True or false, do you reckon, gentlemen?
It is true. Property over the last 30 years in Victoria has gone up. However, it's a long-term investment.
It's a long-term investment. Real estate prices always go up. But in between that, I've never seen any graph that just goes straight up. Every graph, whether it's weather, whether it's your own personal life, the graphs that go up and down, but eventually you're always heading in the upward direction.
What do you need to get into the investment real estate market? There must be a baseline where you must have either an investment you can borrow off or an amount of cash. What's the deal there to get into the investment market?
Well, I think one of the most important points is not just having the deposit, but also having a very secure job. I think that's a very important part. James?
No, I agree with you, Randolph. It's very, very important. And you've got to get into an affordable price. Okay? However, you need a deposit of about 10%, or you need to have equity in your home to get into a investment property.
Is one property enough for financial freedom, or do we need to get a sort of a portfolio going of a couple, or, let's go half a dozen? I don't know. What's the story there?
Darren, we start with one, and then you create, along the way, when the property goes up, you use the equity of this property, and you go into your second
leverage and buy
investment
another property.
Yeah. But you got to put your foot in, and remember, you're doing it for yourself and your family. Like you said, property doubles every 10 to 12 years. A $500,000 property in 10 to 12 years could go up to $1 million. Well, there we are. You reach the age of retirement. If you have a couple of those properties, you can sort of somehow retire a bit more comfortably, yeah?
Yeah, for sure. Although I've heard the story of a friend of mine. He was advised to buy a property which had land under it, like either a townhouse or a single, like a weatherboard house, doesn't matter where it is. And he chose to invest in an inner city apartment about 10 years ago. And you know what? With the oversupply of these type of properties that he invested in, it's hardly gone up at all, and he wished he'd have taken that advice. Do you, in other words, would you buy it as an investment property in the city, an apartment, or would you look for something with land?
I definitely wouldn't. I shouldn't say that, but I definitely wouldn't go buy an apartment in the city. You might get a good rent, but the body corporate fees, and there's hardly any capital growth. The areas to go is the outer suburbs, the fast-growing suburbs, and probably, most likely a brand new property, like a brand new townhouse or a brand new house and land package, because you can get depreciations.
And you get your builder's guarantee as well.
Of course, yeah. And it's easier to rent because people want to live in
savings on stamp duty.
Brand new property. And stamp duty, your stamp duty you pay on the land only.
Would you buy off the plan for an investment?
The pros, I mean, you have, your stamp duty is much cheaper. You pay stamp duty on the land. I think this is till 2025, October 2025. You pay stamp duty on the land only. You don't pay stamp duty on the build. But remember, when we're talking off the plan, we're talking off the plan townhouses and brand new houses, yeah? House or land packets, yeah? Apartments, we don't suggest there because the name of the game is capital growth, yeah?
For sure. What makes a good investment property, I guess, is location. You mentioned outer suburbs. Would it be places close to schools and transport, I guess?
Of course, close to schools, transport, amenities, shopping centres, very, very important. Rental, you've got to look at rental demand, making sure that steady occupancy and income, and low maintenance and affordable purchase price, very important.
It's fairly easy at the minute to rent a place. You see on the news that, people queuing to find a place to live with the students that are back after COVID from all different parts of the world. But could that possibly change where you would have to drop your rent to get a tenant in? I mean, does that change very often?
Not likely at the moment, Darren. I'm getting a bit mixed up between Darren James and James Pastras.
Yeah. But too many Jameses.
Yeah. Look, residential... Within a month, a property is relet. And there are, I think you had rental expert Jane in last week, and as she was saying, residential properties you can sometimes get up to 20 applications on one property and 19 people miss out. So those 19 people are still there. With commercial, it's different. It could be a person transferring their business from one part of a particular shopping area to another, but there's not a lot of people deciding to start up a new business. So therefore, it could take 3 months, 6 months, 12 months to relet your commercial property.
Yeah.
So residentially, it's a lot safer to get tenants.
Yeah, you guys, that surprises me that you're not that keen on the commercial side of investment.
I'm very keen on commercial side of investment. Like I said, the tenant pays most of just about all of the outgoings, except land tax, and they look after the property in higher interest rates. And sure, the interest rates all signs are there. We've had 2 drops now, and there could be another one this year. I'm not sure about a 4th one this year, but certainly looking forward to another one around about the August period. So with interest rates coming down, that does give people the incentive to maybe start up a new business or even help people that are already in business.
Yeah. Land tax, you said that you still have to pay your land tax with a commercial property, obviously. Do you reckon there are a few bargains with people that were investors that have had enough of the land tax and bailing from an investment property? And, are there any bargains because people are getting out of the market when we're talking about, in this segment, getting into the market?
Land tax is one of my favourite subjects. Not really.
No.
But residentially and commercially, properties are coming on the market because people are wanting to get rid of that burden, that ball and chain that they've had around their foot, carrying around with land tax.
Yeah.
And all the other levies that are coming on. I mean, we're just talking about the farmers around Australia and how they're suffering. So land tax and all these other levies that are coming on, all that gets hit to the landlord.
Yeah, that's true. We're talking property, we're talking investing with Raine Horne's Randolph Clements, Managing Director, and James Pastras, the Director of Raine Horne Properties and Investments. Here on 3AW, but not for much longer, at 4 to 12. Gentlemen, it's a decision that you have to make if you're thinking of investing in property, I guess. Just be careful, ask the questions and do your research and due diligence. Would you agree with that?
Yes, I certainly would. I just want to say one thing. Real estate, residential or commercial, has always been a very safe investment. Often they ask, what are the risks and what are the challenges? The risk is always losing a tenant and losing a job at the same time. The challenge continues from that point onwards.
For sure. Randolph, we have to go. We've run out of time. Randolph Clements, Managing Director. James Pastras, the Managing Director of Raine Horne Properties Investments. Interesting discussion from very special kids. That's it for me. The footy's next. Have a great day.
Book your free consultation today at realestateinvestmentguide.com.au.